So a lot is happening with Bitcoin lately, and a really famous investor, Cathie Wood, says that Bitcoin could be worth anywhere between $258,000 to $1.5 million by 2030. But will that actually happen? I spoke to my financial advisor, and here's what he says.
Hello, my financial advisor.
He says to smash the like button so we can buy more Bitcoins, and by Bitcoins I think he means treats. It's nothing like using your dog for likes and views, but it's gotta pay his rent somehow. All right, so there is a lot of excitement about Bitcoin this week because Bitcoin reached around $35,000 per coin and it has appreciated more than 100% this year. And it's all because of the spot Bitcoin ETF, which looks like it's about to be approved. I also want to help explain Cathie Wood's prediction that her base case, not best case, just the base case, is that Bitcoin could reach over $600,000 and up to $1.5 million by 2030. But more importantly, I want to throw out a couple warnings about these ETFs when they're here and what you should look out for. So before you YOLO all your money into Bitcoin thinking we're going to the moon, which could happen, please carefully watch this video and let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for Rito, the financial advising burrito. So it looks like we're getting super close to the approval of a spot Bitcoin ETF, which would allow a new wave of adoption into Bitcoin. Imagine if a company like Apple with $167 billion in cash decided to put 1% to 2% of that in Bitcoin. Soon they'll be able to. And there's at least 8 to 10 wealth management companies that have filed for their chance in line to do so with the SEC. And just this past week, Bitcoin's price has been going crazy because something actually happened. Way back in October 2021, an asset management company called Grayscale filed to convert their futures ETF into a spot Bitcoin ETF. The SEC, of course, didn't let them. They pulled a Gandalf and they were like, "You shall not pass." And, of course, Grayscale sued them. And they won. The courts sided with Grayscale. And last week, the SEC could have appealed the court's decision and fought that case, but they chose not to. And here's a clip of that directly from the guy in charge of the SEC admitting it.
We didn't appeal last Friday. I think that's accurate. We have not one, but multiple, I think it's 8 or 10 filings that the staff and ultimately the commission is considering for what's called exchange-traded products.
So the fact that the SEC didn't fight this decision means they're a lot more open to now approving it. But reason number 2 why Bitcoin's been going crazy is because of what happened on Monday, October 23rd. That's when IBTC, which is BlackRock's ETF filing, mysteriously appeared on the DTCC's website. So lots of acronyms here. IBTC is BlackRock's ETF ticker symbol, and DTCC is the Depository Trust and Clearing Corporation. Not important, all you have to know is that every ETF, when it gets filed and approved, has to go through the DTCC's website. So when IBTC was listed on their website, everyone was like, "Moon landing confirmed." So people bought into the hype, they bought Bitcoin, and it went up to $35,000. Then the next day, on Tuesday, it mysteriously disappeared from their website and Bitcoin went down in value. Apparently it was some kind of glitch because that same day on Tuesday, it was relisted once again and Bitcoin went up in value. But that's a day in the life in crypto where he's been investing since 2009 and he's only 25 years old. So if any one of these ETFs get approved, that will give Bitcoin access to trillions of dollars that could potentially flow into it from 401ks, corporate treasuries, and so much more. And that's when it gets crazy. Now, personally, I'm not a huge fan of price predictions because they're almost always wrong, but I still want to help explain what I consider to be one of, if not the most famous price prediction for Bitcoin from Cathie Wood. Now, if you haven't heard of her, she's done some pretty incredible things over the years. From 2014 to 2021, the money that she managed for her clients made an average of 39% per year, which is more than 3 times the return of the stock market during that same time frame. Now, at the peak in 2021, her company managed $50 billion for investors. And that's of course because the government flooded the economy with money, so all the risk assets exploded in value and everyone was making money, especially in tech stocks. But then we got inflation and all the risk assets started to collapse. So unfortunately, her ETF finished the year down 23% in 2021 and down almost 67% in 2022. So that's a little brief background about Cathie Wood and why she's famous. She's not perfect, but she has had a couple home runs. So now let me help explain her Bitcoin price prediction, because her base case scenario is that each Bitcoin will be worth over $682,000 by 2030, which sounds completely made up. It's like they just randomly were like, think of a number 1 to 10, 6, roll the die, 8. There's no 8-sided dice. What's left over? 2, 682,000 by 2030. But there is a specific reason. So here's exactly what has to happen to Bitcoin in order for it to get there. So here's the magic chart I want you to see. Now, if you don't agree with any of these assumptions, just look at the left column and see the numbers, because that's the ultra-conservative or bear case scenario. The first thing I want you to look at is corporate treasuries. It says 2.5% of corporate treasuries will be held in Bitcoin. What that means is corporate treasuries are sort of like a company's piggy bank. Most major corporations have something called a corporate treasury department. Not all of them, but most of them. Now, this is where they decide what to do with all the cash they have on hand. Some companies will pay their shareholders dividends. Some of these companies will invest the money. Some will buy their equipment. Some will just hold that money in cash. But cash is a depreciating asset. It goes down in value over time thanks to inflation. But Bitcoin is a cash-like equivalent that hopefully goes up in value over time, which is what it historically has done. So this assumption says that for every $100 that a company has inside of its corporate treasury, $2.50 of it, if it's invested into Bitcoin, that's one of the things it would take for Bitcoin to reach that price point. Now, the second assumption in this chart is that Bitcoin needs to represent 10% of the total global remittance volume. Sounds very complicated, but it's really easy. Anytime you send money overseas to someone, that's considered a remittance. Now, instead of using something like a Western Union, which is really expensive, if just 10% of the total volume is sent in Bitcoin, that's what that means. So assumption number 3 is that 1% of a nation-state treasury needs to be held in Bitcoin. So just like I explained with corporate treasuries, this is for a country. So El Salvador is a good example. It became the first country to buy Bitcoin using its country's piggy bank. Now, if just 1% of the entire world's piggy bank holds their money in Bitcoin, that's what it would take. The next assumption is that Bitcoin needs 3% of all emerging market currencies in the M2 supply outside the top 4. Now, I said a lot of complicated words there. The top 4 refers to Brazil, Russia, India, and China. The top 4 emerging markets, we have to exclude those. M2 refers to physical supply of money. And as far as the countries go, we're talking about the people within the country. So if 3% of overseas emerging countries' currencies are held in Bitcoin by the people, that's an example of that. Now, the next assumption is that Bitcoin needs to represent 5% of the economic settlement network. Also, sounds complicated. An example of this is if Russia and China want to send money between each other, and they don't trust each other's currency because why would they? They might want to use Bitcoin. Except this is a global example. But in this specific one, the TAM, which stands for Total Addressable Market. Like, what does that mean, right? Are we talking about the world? The TAM says specifically the US network, the US banks. So in this specific category, we're talking about if Chase wants to send money to Bank of America, and instead of using another proprietary settlement network like SWIFT, which again is expensive, takes forever, they're like, let's just send Bitcoin to each other, convert it to dollars later, and worry about that later. So that's what that means. 5% of the volume traded from bank to bank in the US. The next category is 3% of seizure-resistant assets held by HNWIs. Fancy word for high net worth individuals. That's anyone worth between $1 to $5 million. Because the TAM, Total Addressable Market, is global, that's referring to if 3% of the global millionaires worth between 1 to 5 million have a Bitcoin, that's what that means. The next category is 2.5% of institutional investors. If they keep 2.5% of their money in Bitcoin, that's what that refers to. And the last one is 40% of gold's market cap. If Bitcoin can capture some of those people that invest in gold and it gets to 40% of gold's market cap, that's what it would take. Now, gold's market cap is currently roughly $13 trillion. So 13 trillion or 40% of that is a little over 5. And Bitcoin's current market cap is about 670 billion. That's a difference of 7 or 8 times. So if you take that factor and multiply it by Bitcoin's current price of, let's say, $35,000, that is roughly $250,000. So that's the math behind that. Sounds complicated, but it's accurate. Trust me, bro. Now, all of this sounds exciting, but we can't get too ahead of ourselves. So here are my 3 warnings for everyone to consider first. Warning number 1, Bitcoin has a higher chance of going down in value than going up in value in the short term. And that's because everyone is buying Bitcoin now on the rumor that the ETF could get approved, so that when the news comes out, they could sell it. I think it's really wise to consider what Peter Schiff is saying. In the short term, more people could be waiting to sell their Bitcoin than buy into it. Now, in the medium to long term, the price of Bitcoin will probably go up, but warning number 2, when these Bitcoin ETFs come out, there's a couple things that you should look for. Every ETF, for example, has something called the expense ratio. Now, this is how much money you pay per year. It's not something we actively pay and send money to someone, but it does get subtracted from our overall return, so we do end up paying for them. Now, the lowest expense ratios usually come from low-cost broad market index funds like VTI and VOO, where their expense ratio is 0.0 something, 0.03% in the case of VTI and VOO. That's considered cheap. But when these Bitcoin ETFs come out, I'm guessing they're going to be a lot more expensive, closer to 2%, because that's what their futures-based ETFs are at. They're 2%, and these could be even more because these are actual Bitcoins they have to manage, which takes a lot more time and it's a lot more risk. But still, 2%, that doesn't sound like a lot. Most people will have no idea how much it's going to end up costing them, so let me blow your mind here. Let's say someone put $100,000 into Bitcoin with a 2% expense ratio over 30 years. Assuming 8% returns, you'd end up with $574,000, but the fees will end up costing you $431,000 over 30 years. If you had that same investment at a 0.03% expense ratio like the one I showed you, you'd end up with almost double that, $998,000. And that's how much only 2% expense ratio could end up costing you over 30 years. As much as 40% of the overall return will be wiped away, which instead should be in your pocket. So warning number 2, pay attention to those fees. And warning number 3, pay attention to how they manage it, because some of these ETFs will manage it all differently. Some of them will have it in cold storage. Some of them will have suspiciously lower fees. Some of them might even pay out dividends, and some of them will presumably do all that by lending out the Bitcoin. And is that something that you want? After everything we've been through, I don't think I want that for myself, but it's something to pay attention to because they will all manage it in a slightly different way. But let me know in the comments below if you'd like me to make a future video about the best and worst ETFs once they get approved. Now, here's my personal thoughts. As far as price predictions go, I think the only truth about Bitcoin is that no one knows what's going to happen. Now, here is something to consider. If there is a recession, which a lot of people think is still coming next year or the year after that, if there's a recession, it's the riskiest assets, of which Bitcoin is one of, that sell off the hardest. Bitcoin is not recession-proof, so it is not guaranteed to stay or go up in value. But to play devil's advocate, if the Federal Reserve decides to stimulate the economy by lowering rates to get us out of that said recession, then we eventually get more inflation, which means Bitcoin goes up in value. Combined with the halving that happens in 2024, you get more demand because the ETF and a lot less supply plus inflation, you get a perfect recipe that sets Bitcoin up for success. So those are the two scenarios to consider. Now, I think Cathie Wood is right that Bitcoin will be worth a lot more by 2030, but how much more is something that no one knows because market caps don't go up in a straight line. And remember my deck of cards example. If I sell one card for $1, because there's 52 in here, the implied value of this deck is $52. But if I sell the second card for $10, the implied value is $520. Now, is this deck of cards worth $520? Maybe it is because I played with them. I don't know. People love them, right? But what's also true is that we only put in $11 in the ecosystem, and now it's all of a sudden worth $520. So what's also true is that it will take a lot less money for it to boost up to insane valuations and a lot less money to sell during a recession when people are scared to crash its value. So please stay safe, diversify, and smash the like button so I can keep feeding my financial advisor. But as always, hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. Let me know what you think, and I'll see you soon. Bye-bye.